I want to start with something that sounds like a complaint, but is actually a data point. A good job doesn't buy you a house anymore.
It's not a complaint, it's arithmetic. And the strange part is it went true in about 5 countries the same week.
5 countries, same week. That's not a coincidence.
No. Madrid, Mexico City, Mumbai, right here in the US. Different cities, one mechanism.
Okay, so this is the part where I call it a housing story, and you tell me I'm wrong.
You're a little wrong, it's a capital story. It just happens to end at your rent.
That's a better hook than mine. I'm Marcus.
I'm Elena. One quick thing before we get into it. This is us thinking out loud, not advice. We'll show you the chain, the rest is yours.
So, walk me through it. If a good salary doesn't get you the house, who's getting it?
The person who doesn't need a mortgage.
The cash buyer.
The cash buyer. That's the whole shift. In the strongest markets right now, the winning bid isn't the best job. It's the one that doesn't have to borrow.
And everyone else is stuck behind the interest rate.
Behind the wall, a 30-year mortgage near 5% prices out anyone who has to finance. So the house stops being priced off your paycheck and starts being priced off somebody else's wealth.
And wealth doesn't get tired.
Wealth never gets tired. That's the thing people feel and can't quite name.
Give me where it's sharpest.
Spain. Rents just hit an all-time record.
How bad?
35% of a typical family's take-home pay courted steer in before they buy a single grocery.
A third of your salary gone, just for the roof.
And buying is worse. Prices up almost 13% in a quarter. About double the European pace. And the one national tool to pull tourist flats back into normal housing? The Supreme Court struck it down in May.
So the most educated generation Spain has ever had. So
Can't rent a flat on their own. Right.
Mexico City, same thing.
Same engine, different door. Roma, Condesa, remote work dollars, and short-let money showed up first. Landlords pulled the long-term leases, rents blew past local wages, and people got pushed out of their own neighborhood.
Before anyone did anything about it.
That's the tell. The law is only now catching up. Chicas a cap on rent increases near 4%. The money repriced the street. The rule shows up last. It always shows up last.
India, you said this one has a number that stopped you.
It did. Mumbai, the loan payment on a normal flat would eat 69% of a household's income.
69%. You couldn't
qualify. Banks won't lend past 50. So a salary 4 times what your parents earned doesn't just feel short. No, can't say that the math literally rejects it.
And renting instead.
Bengaluru rents jumped almost 9% in a single quarter, so you can't buy, and renting is running away from you too. It closes from both sides.
Okay, back to the cash buyer. Who actually is it?
More and more institutions. In the US, the median home now runs about 5 times median income, near the highest we've ever recorded, and the people who can pay that aren't workers, they're funds.
How much do they own?
Wall Street landlords built up around 450,000 homes. In a city like Atlanta, big investors own roughly 1 in 4 rental houses.
1 in 4 on the street.
But here's the twist nobody clocks. Now that the trade is crowded, those same firms have been net sellers of houses, 6 quarters running, and they're building rentals instead.
Wait, so they're not buying homes up anymore. They're switching everyone over to renting.
They're quietly rebuilding the market from own to rent. And when your roof is priced off capital instead of wages, the people with capital take a little more of the city every year. Everyone else leases it back from them.
All right, next week, one thing to watch, one thing that's happening, one thing to just understand.
Watch the long end of rates. If the 30-year won't come down, the wall stays up and cash keeps winning. The thing happening, Mexico's inflation print lands Thursday, and it sets the exact ceiling on that rent cap. And the thing to understand, not chase, keep an eye on whether the safe money keeps flowing into hard assets like housing. When the professionals move first, it shows up in the flows before it ever hits the headlines.
If someone takes one thing from this,
housing didn't get expensive because of houses. It got expensive because of who's buying them. That's a chain, not an accident.
Spain, Mexico, India, here, different doors, same mechanism.
Capital first, you last. We just try to show you the links before they reach your door.
The headline is never the risk. The chain is. That's the physical chain. Thanks for sitting with us. See you next week.